Now let's get straight to Deutsche Bank. The chief executive, Christian Sewing, says far-reaching changes, including cuts at the investment bank, are needed at the German lender. Now, the chief executive and chairman are facing angry shareholders at today's AGM. Bloomberg sources say many of the lender's biggest owners want to see Paul Achleitner, the chairman, gone before his term officially ends in 2022. Well, a series of botched turnaround efforts and failed takeover talks with Commerzbank have also seen the stock plummet in recent months. It hit another record low this morning. Joining us now from Frankfurt at the AGM is Bloomberg's Annmarie Hordern. Annmarie, the Deutsche Bank chief executive was saying, look, he's going to do some tough cutbacks to the investment bank, but will that be enough to appease shareholders?
Certainly not. Just coming out of that meeting now, after Christian Sewing spoke there, shareholders got on stage, and you can see and feel the frustration and anger they have at the supervisory board, at the management, for what has been going on for the past really 7 years since the chair Paul Achleitner has been at the reign. The shares have fallen 70%. One shareholder complaining that it's cheaper to buy a Deutsche Bank share in Germany than it is to buy a pack of cigarettes. And now, why are they saying they're going to have more cost cuts, more to the investment bank? You can see in the share price that didn't move the needle at all. It's really the same playbook from the CEO. Still more cost cutting, but what shareholders really want is revenue growth. And where's that coming from?
Well, how did they answer that? I mean, you're absolutely right, Annmarie. It is about a revenue growth story and the positioning of the bank. The chairman had a headline out that they want to be a global player. Does Mr. Sewing want to be a global player?
It's a very good question. I think that's one of the things that is the debate between the chair and the CEO. That is their ambition and dreams, but it doesn't seem to be working. And I think they're taking on board what shareholders are saying. Shareholders, critics, investors alike have all said the investment banking unit needs to go. There needs to be a mass overhaul of that unit. That is the unit. That is the unit that's the sore spot. I mean, the fact that it pays out massive bonuses, has all this capital expenditure, yet out of all three divisions, it is the one that costs the most and doesn't make much money. The one thing that they do want to keep, it looks like, is U.S. real estate, FX, and global trading.
Well, that would be good, because their FX division has great guests that we talked to. Annmarie, this is critical. What's the when of all this? When do they actually rationalize investment banking?
When do they actually rationalize investment banking? I mean, I think what the question remains to be seen after this AGM is where in the investment banking they're going to cut. One thing that they did omit was the equities business, and someone close to the matter said that was omitted purposely. So many are expecting that business to get a lot of cost cuts. The other main thing is what is the time frame for this? I mean, the market didn't really move on this, and I think there's a lot of questions of, okay, more cost cuts, but where's the time frame on all of this, and where exactly in the investment banking business is this coming from? These are the questions that remain to be seen. The other big question is this confidence vote today. How will the supervisory board do? There's no real consequence if they don't get this vote of confidence, but it will be a huge blow. It'll be very embarrassing.